All right. Speak of the devil, here he is, the man of the minute, Mr. Saul Lokier. How you doing?
How are you, Jordan?
I am really well. It is good to see you. It's good to have you here. We're having a solid live stream. I've just grilled Aaron on his story of how he became a trader, and
Okay,
I'm ready to fire some questions your way.
let them come.
But how's your day going? It's what time are we getting there? Around 1 p.m.
Yeah, 1:30.
1:30. How's your day been so far? Have you been trading today?
I'm holding a position. I'm holding dollar franc that I spotted it was going very low into a very old demand. So I just decided to pull the trigger and just get the trade long. And yeah, I'm holding that. I haven't done any day trading or something like that.
Oh, okay, beautiful, beautiful. Oh, so you think this is more of a swing position?
Yeah, it's long-term one. Yeah, like a swing.
Yeah, lovely, lovely. All right. For anyone who hasn't seen Saul before, Saul, do you want to do a quick self introduction?
Yeah, my self introduction would be more humble. So,
Go
just
for it.
passionate trader. I trade forex markets in 13 years already. Currently, also running the general manager of the Fibers. I guess many of your audience is aware of who we are. Yeah, father of two. What else?
Beautiful. Look at that. It's so humble, so humbling, Saul. Now, okay, look, I wanted to touch first things first. I wanted to have a chat a bit about the Fivers today, a bit about trading in particular, and some of the successful traders that you see at the firm. I remember, I think it was 6 months ago we last spoke, and one of the most interesting statistics, because it's a topic we've been going back and forth on for the past couple of weeks here at TradeDelicious, was you seen more success from swing traders than you did from day traders. And I'm
Correct.
curious to know if that's still prominent.
Yeah, it is. And just to elaborate on the answer, when we refer for successful traders, which is speaking of those who get to higher levels of funding. But there are a lot of day traders and scalpers that make a lot of money just in smaller accounts. I'm just speaking of those who manage to grow into larger and larger accounts. I guess there's a lot related to the amount of commissions they use or they don't use. Those traders who don't scalp, so they save a lot of commissions, and we see how the commissions really a part of the performance of traders, and swing traders get less affected by commissions, so they manage to do more efficient trading. And yeah, we just see how their risk rewards are better, and they manage to get to larger accounts. That's still a fact.
Yeah, I find it so interesting that's the case. Obviously, it is two completely different ball games. When you're looking at swing trading or looking at day trading, it's highly possible to be profitable in both scenes. One takes a lot of patience, the other one takes a lot of guts.
Yeah.
It's definitely an interesting scenario to be put in. This is something that's been reveling on my mind for a little bit, and I've taken a bit of a shift. From a exposure standpoint, okay, did you see, I'm talking more on your funded accounts, so not the Fivers as a business, but in the actual trading accounts, did you see a positive increase, a neutral time, or a negative increase during COVID-19 in your traders' performance?
To be fair, I wasn't involved with the Fivers during COVID. I just started my relationship with the Fivers, but certainly not at the point that I would have access to risk and data and the accounts. So I don't know. I don't have that.
So that's completely unvalid.
Yeah.
Good. Okay. Good. No. So I wanted to ask, because obviously we see these pivotal moments throughout history as transitions and trendsetters, and we've seen. Well, I've personally seen in trading that coming through COVID, there was a massive increase in the amount of people that were interested in trading, a massive increase to people that started trading, a massive increase in the competitiveness of the fivers industry in there. And I was curious to see if you've noticed any trends that have come from that and took place, whether it's within your traders, whether it's within the business, whether it's within your own trading, from that indulge of new traders.
Okay, for that I have an answer. So certainly from COVID, there was a large, like, it's a no-brainer, right? But it's a large amount of traders or people who look for an extra income that can be doable from home, obviously. And there was a lot of traders getting into retail trading, opening brokerage accounts, looking into what's the prop firm wasn't as popular as it is today. But we did see an important one, of new traders and new accounts being opened with us. And since then, the whole industry has evolved. So since 2000, maybe 2 years ago, 2021, there was also a lot of attempts of opening new prop firms, new funding companies. We saw many, and most of them eventually closing because they couldn't manage didn't have the infrastructure or the risk department or something, and they closed. And lately, like 1 year ago, we started seeing new companies, most of them being white labels from certain technology providers, who are good companies, and they have been expanding the industry and expanding the awareness of traders into the funding industry. Personally, I trust some of them. I trust some of them less. Being from out of the industry, everything might look similar, but when you're in the inside, you can clearly see the differences in the business, and you can tell which companies have a solid infrastructure and risk department behind, and which ones are only relying on revenue to cover for profits and not even having any interaction with the market. So that's something that kind of disturbs me sometimes, because I think you start hearing a lot of companies that don't pay traders when they deserve a payment, just because they don't have enough revenue to cover that payment. So that's something that needs to be addressed. But other than that, the overall awareness of the industry has increased, and growth, and of course the fibers as well. We have been growing since then. Since the COVID, we have been only growing and growing.
One thing I've noticed from having the privilege of being in the team and working with you guys is the admiration and how much you guys want more competition. Like the competition is seen as a good thing rather than a bad thing. And for that exact reason, I mean, it's very easy for us to look at a business model and know within the industry where their revenue's made or how they operate. For new traders out there, what are the two main differences you see between some of these businesses? When we're talking here and you say they don't have a proper risk management department and they're focusing on revenue, what do you mean by that?
So just that some of these companies are just focusing on getting as much revenue as possible, so they have that backup to cover for payouts. They don't have any connection.
By revenue, are you meaning to sign up fees?
Yeah, because evaluation fees, correct. Evaluation fees, and they don't have any connection to the real market. They don't have LPs behind. There's no trading happening behind the scenes. And of course, there are others that they do have that in place, which is good. And yeah, we embrace good competition. That's what we embrace, like fair and good competition. We like that because it helps to grow the industry. And I think we're in an industry where the costs or the entry costs are not very, to get an evaluation on a funded account are not very high. So, if you come with us, and we know by the fact that many, probably all of our traders, they also trade with other companies, and it happens the same. A trader from other company will come and trade with us. So as long as they stay on a safe environment within the industry, because they landed on a good company, they will trust other companies to go and trade for them as well. So that's why we welcome good competition also, like always.
Yeah. As a company that does have the correct risk management department, and Ruben, obviously head of risk management, who we're going to be speaking to later in the week as well, has there been any moments of panic where you're exposed to a certain asset too much to what you want to be, or anything within there?
Yes, but nothing very, that the companies at risk or something like that. Sometimes you see that there's a lot of the book, a lot of the traders trading a certain asset or a certain pair, and if they end up losing money, that you need to make sure you compensate for that loss. So then we go to the market and we open probably the opposite
Like
position.
hedge.
Yeah, we hedge that exposure, but nothing at a point that put us at risk or something like that.
Yeah.
Like we're at the point that we have the systems in place to be well balanced all the time.
I find that so fascinating. It must be the trader within me, that the reaction to hedge to make the decision on whether to hedge or not, and then seeing, and it happens so often, a clear bias from all the retail traders or even traders at the firm, where they're all kind of trading the same direction within reason around the same time. Is that common?
It is no. That happens on less traded assets. Like usually on the major pairs, like we trade like forex, currencies and metal, so on the majors, there's usually enough buyers and sellers at the same point, so there's no like overexposure. Sometimes on less traded assets, you have like just a couple of traders trading one direction, and those are all the traders in that trade. So if those are large traders, like trading with large volumes, that would be like we need to do something about it, but it doesn't happen that often. So most of the time we're good.
You got the clap of approval. We're good. We're good. You got the clap of approval. I love it.
Yeah.
Guys, if anyone has any questions for Saul or myself at any point, please feel free to chuck them in the chat. We've had one come through, David. I'm not sure if you're able to answer this or not, Saul, but I'm going to throw it your way anyway, and you can let us know. David's asked, what's the average attempted failure before pass? So how many times do people fail before they pass an evaluation on average that you see?
It is a complex question because it really depends on the program you're talking about. So our flagship program is we call it today the hyper growth program, which is the instant funding program, and it's the program we would like people to go there the most. That's the program has been with the company the longest, and where we see the highest success rate, all across the programs and probably the whole industry. And I really welcome traders to go to. I invite traders to go to try that program because you will experience more success there than in any other program out there. So,
which I personally did as well. Which I personally did too.
Yeah.
When I was introduced to the Fivers, it was the instant funded account path that I went down.
So, giving an answer of how many traders come for the first time and pass is really, really hard. I do have the because you never know the background of the person. A first-time trader, you don't know what's his level of experience or what strategies he's using. So the statistics might be misleading in that sense. But I can tell you, traders that fail one time and then come again to the same program, they increased by 10% their chances to get funded. And the passing rate on that program is 25%. So one out of 4 traders are getting funded in that in the hypergrowth program, which is super high, and we're very proud of that number. And we see how our risk parameters help traders to succeed that much in that program. And probably you getting, we get a lot of rejects from traders that, okay, but I'm not getting a 100K account. And that's true, but you're getting paid and you get funding, and you have now the opportunity to grow that account, which each milestone you will get a larger account, and eventually you will get to those larger and larger accounts. By the way, most of those, 500,000 and larger accounts that we spoke, most of them are from this program, from the hypergrowth program. The high leverage programs, they tend to have a lower success rate than the hypergrowth program.
Why do you think that is? Do you think there's an attraction, or maybe attracting a different party there?
Yeah, I think all social media around Forex is about the high risk, high reward, and high leverage, and making that lucky trade that will make you a lot of money. But that's not just sustainable, So you might have that immediate success, but it will not be a long-term success. So I think we get feed with that constantly, with the Lambos and the social media and all that stuff. And that's why I guess, especially younger traders in their 20s, they tend to go to those programs. But bit more experienced traders will opt for a different program, and they will make it as a successful trader, for the long run.
Mm-hmm. Let's go back to that 10% increase the second time traders come back. You're a trader yourself, right? I know your story. We've done live trading rooms together. Why do you think there's an increase in success second time round?
Again, many times traders coming to the company for the first time or for the program, and many times they don't know the rules of the program. So many times, without knowing that they have a certain limit, they might lose their account, or they have a strategy that works with certain risk parameters, and now they need to do that adaptations to the rules of the program. So it's very hard to do those adaptations and to really test the program without trying the program out. So many times we see traders failing because of lack of adaptation to the parameters of the program. But once they understand completely the rules and the daily pause and the leverage allowance and the risk parameters we have in place, then okay, they do that tuning to their strategies and they manage to succeed more in the program.
Do you feel like I've put you on the spot yet?
No, we're doing good.
No, we're doing it. For those of you that don't know, we have a running joke that I keep putting Saul on the spot every time we're live. But okay, let's have a look at moving forward. A lot of competition in the space now. Prop firm, it just seems to be Twitter. It's everywhere. Wherever we look, a lot of competition, a lot of new competition, a lot of loud competition. It's starting to plant the idea that maybe some kind of regulation needs to come into the area. Is this a welcomed thing by the fivers?
Absolutely. Because again, if regulation comes, they first will, pause the whole industry and all these companies, and they will check what's going on behind the scenes, and they will check why, okay, if you're allowing traders to trade on your behalf, why is there no activity going out to the markets, or why you're not paying what you were supposed to pay? And they will do all this, the diligence to the whole industry, because there's no regulation at all today, and only the good competitors will come on top from that process of regulation. So I think that regulation will clean out all these companies that in my point of view, they're not doing the right thing. And the good companies will stay, and there will be a solid industry below regulation with clear rules. Also for traders, a trader who get who doesn't get paid by a company has nothing to do today other than going to, I don't know, to social media or to talk to other people about what happened. There's no regulation to go and complain about the case. So there will be something to do for traders who get that very bad experience. So I'm just looking forward for regulators to come.
It sounds like you're calling for it, like
the
industry needs it.
And we've talked to them, and I guess they're very comfortable with the brokerage industry, and they have still a lot of work to do in the brokerage industry. And I guess still the prop firm industry is not large enough to be relevant for regulators, but I'm looking forward to it.
Yeah. It's good. It is good, and it's a great show of transparency too that you welcome it so clearly. Let's dive more into your trading. Let's ask you a couple questions on your trading. You're holding a US dollar Swiss franc position. How did last week go for you?
Last week?
Yeah.
So last week I was trading I had like 3 trading days, I believe, or 2 trading days. Tuesday and probably Wednesday, and then on Thursday I took that position. There wasn't a lot of. I didn't trade that much, but it was good. I mean, I don't. Sadly, I don't have every day the opportunity to sit in front of the markets and trade. Probably 2 or 3 times a week. But it was good. I mean, I always try to stay humble and don't say something I shouldn't, because I know that
come on, let it out.
The moment I open my mouth, the losing day will come. But I'm grateful that I've come to that point where losing days are very few, and those who happen are not very large. So as long
I'm sorry, did you say you wanted to sound humble?
Yes.
I'm winding you up. Yeah, okay. So it's very rare you're closing on the losing days now?
Yeah. And
but your trading day frequencies dropped as well, right?
Yes. So which is also good, because I'm more picky with the setups I take, and if there's not a very good opportunity, even if I have the time, if there's not a good opportunity in front of me, I'll just not take it. Yeah, my trading so far so good.
That's good. That's good. Guys, if you have any questions you want to ask Saul before we head on to the next segment here, fire them through. We've got a technical question here coming through from Russell Saul. I'm going to ask you. He says, how can you swing trade with instruments like the Nikkei or the Japanese 225 with such high swap rates and don't have a huge hit for your profit?
The high swap happens during the weekend. So that was a risk policy that we got also from some LPs we got, and from our internal risk department, to not allow, but not to encourage over the weekend trading on indices, because of the gaps and the risk involved in that. So that's why they put in place the high swaps. So if you are, Russell, if you are a swing trader trading indices, just make sure you don't leave the trade open over the weekend. During the weekend, you will not experience high swaps at all, just over the weekend. So as long as you can close your trade on Friday before the weekend, you will not get affected by that.
Yeah, and that's just another show of clarity when we think, while you may be trading on a $50,000 account, there's another 300 traders also doing that, and the exposure of holding those overnight. And indices can gap. FX does it from time to time. You remember the Swiss franc a little while ago on that 4,000 pip drop weekend that we went through. And it's good to see you pulling the risk analysis through there as well. David's asked more about your trading. Do you do top-down analysis?
Yeah, I'll be doing a trading room tomorrow. So every Tuesday I do trading room and I show my process. But basically, I tend to start from the dailies. From the dailies, I get like my bias, and I go to lower time frames to get my more detailed levels that I want to be active. And then from my 5-minute chart and 1-minute chart, I get my setups and my execution. So it's my dailies is my bias, hourlies is my levels. 5-minute charts is my setup, 1 minute chart is my execution.
Beauty. Well, Saul, thank you so much for joining us here at TradeDelicious for a little check-in with the fivers. I honestly hope you have a great rest of the afternoon. It is getting to the late afternoon, and wish you a happy trading week.
A pleasure, Jordan. Thanks for the invitation.